And something that you just touched on a little bit earlier was, the power law dynamics that are in place in VC. I guess really curious to sort of understand what role does the power law play in terms of you making particular investment decisions or the way that you kind of think about structuring your portfolio?
It is the law. It's not even that one startup will represent the majority of returns in a particular fund of Blackbird or whomever else. It is that one company will represent the majority of all returns of every single fund of a certain decade. I would say that if you looked at the first decade of this century, Atlassian would have accounted for the majority of all startup returns from that decade. In the last decade, that has been Canva, and Canva is likely to represent the majority of all returns of every single fund of every single year in the second decade. And so it's so extreme and so tied to this outlier success. And so, again, the sort of two important points to master from Blackbird's point of view is identifying those companies right at the beginning when they don't have a product. Again, that's so hard and so hard to get right on a consistent basis. But that's the job is investing everything in building our systems and frameworks and philosophy and so on to identify that company before they have revenue and a product. But the second thing is it's so important to build a great relationship and to continue investing in that company. I would say the reason why Blackbird has 15% of Canva and more than triple the next investor shareholder and is that wonderful relationship that we have been able to build with the company at many different levels and many different levels of Blackbird, and raising and creating those follow-on funds to invest hundreds of millions of dollars just into Canva. That is highly underrated as what accounts for Blackbird's success. So the first piece of identifying and investing at the beginning, I think people mainly talk about that, but the investing hundreds of millions of dollars after it's successful, that is in total response to all returns will be driven by a single company in a particular decade. And the venture capital industry still hasn't quite adjusted its behavior or adjusted its approach. I think people know about the power law. They know that the power law creates these results in their funds such that one company accounts for the majority of returns, but they don't also look outside of that and think just how important that outlier is, or just how important that generational company is to all of the returns of all of the industry in all of a decade.